On the close, Deere out with solid third quarter results, but investors are worried that the farm machinery boom has reached its peak. More on that next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang, Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
All right, let's get right to our top calls, the big movers on the back of analyst recommendations. And we start with Hawaiian Electric and that 70% drop in the stock over the past couple of weeks. Wells Fargo saying it's prudent now to assume the company's utility operations are worth $0 per share. This is the Maui wildfires and looming lawsuits back the company into a corner. But he upgrades the stock to equal weight and resets its price target to $8 a share, down from 25, based on what he says is the value of the company's banking unit. Those shares higher on the day by about 14%. Next up, let's take a look at Farfetch, the online clothing and beauty marketplace, getting cut to neutral from overweight at JP Morgan. The price target slash more than half, down to $6 a share. The analyst citing limited near-term visibility after the company's earnings and says the year of execution that the company had touted now being threatened by weakness in China and the U.S. as well. Farfetch shares, wow, down 43% here on the day. And finally, let's take a look at Cigna, downgraded to hold from buy over at Edward Jones. A lot of concerns out there right now about some of the trends in the pharmacy benefit manager space on the heels of that decision by one of California's largest insurers to drop its PBM contract with CVS Caremark. Shares of Cigna, though, rebounding a bit here on the day, up by about 2%. And those are some of our top calls. We want to stay in the sell side space here and focus on Deere. We got third quarter results from the farm equipment maker, which raised its annual outlook, yet the stock is actually down today. Some concerns here that the good times that they reported on for the past may not necessarily be indicative of what to expect in the future. Kristen Owen joining us right now, Executive Director for Equity Research over at Oppenheimer. She has an outperform rating on Deere. And let's start off with the results that we got here. Kristen, they were good. We kind of knew they were going to be good given the trajectory of crop prices.
Yeah, Romaine, I think you've summarized that well. The results were very strong, beat top line by 4%. Bottom line came in nearly $2 over consensus estimates. And yet a lot of that was already baked into expectations for this quarter. I mean, results that we saw from AGCO, CNH, Caterpillar all suggested very strong seasonal performance in this fiscal quarter. And Deere didn't disappoint. So I think they were sort of walking into a no-win situation here where the numbers were good, the expectation was good, and all focus was on 2024, where we still don't have a lot of clear visibility into what the demand outlook is. And I think that's why we're seeing shares lower today, just in light of that uncertainty for 2024.
And we start to talk and look forward here at, I guess, some of the dynamics that we're seeing in the farming industry in terms of harvest levels and, of course, how that affects prices here. What's your general outlook right now about, I guess, how much money farmers are going to have in their pockets and whether they're going to have the need and the willingness to spend money on new equipment?
2023 is shaping up to be a very good year for farmers. We are off from those high commodity levels, but they're still elevated relative to prior historical levels and really above those reinvestment levels that we would expect to see farmers start to spend money. Now, down from 2022 records, but still top 3 in terms of commodity price sales volume that we should expect for farmers. The outlook for 2024, a little bit more complicated at this stage. And what we've seen is a lot of volatility on the commodities prices, and there are a number of factors that are contributing to that, namely geopolitical, as you mentioned, some of the demand issues for commodities. So that is one swing factor where we don't have great visibility. But what we can see is that input costs are also coming down pretty substantially, and that should help sustain some of the decline in the commodities prices that's influencing the net farm income for 2024. We think it's probably going to be down versus 2023, but still looks like it could be a very strong year in terms of demand for equipment.
And so, Kristen, when you put that together and you look at the reaction that we're seeing in the stock market to Deere and the outlook down 4.5% or so, is it safe to call that an overreaction?
I don't know that this is an overreaction. I think the setup into this quarter really was challenging. There was very little Deere could do to impress investors at this stage. You know, the investors that I talked to, I'm anticipating that today is much more of a realignment given the nice rally that the shares have seen over the last 6 weeks, sort of a sell the news dynamic, and now it's repositioning for where are we in this current cycle, which I think we've talked quite a bit about, and aligning to that expectation, taking some chips off the table given the nice run, but leaving intact a lot of that position, knowing that this volatile commodities backdrop could send shares up another leg higher from here.
And Kristen, as you walked us through, of course, commodity prices have a big influence on farmers' budgets for what they can spend on machinery. And with that being the case, and you think about the extreme weather that we're seeing around the globe, how do you factor that into your analysis at a single company level?
It is probably the most difficult part of my job, either modeling the commodities or modeling the geopolitical environment. And I think even just this week, you know, in the West Coast, we're preparing for a hurricane. We haven't seen that in decades, and that could impact, you know, our specialty crop prices, the dry weather that we've seen in the Midwest, obviously having an influence on crop prices. And that's this sort of volatility that we can't be prepared for, and why we're seeing this this long position maintained in Deere is that volatility is going to give a lot of opportunity for this cycle to be very different from prior cycles. We think potentially shorter. We think the magnitude of the downdraft could be much more shallow than it has been in prior cycles, and it's giving this cycle time around technology an opportunity to really proliferate. If you're a farmer, you want to understand, how do I manage that volatility? And technology is going to be a key lever for doing that, and we think that that bodes really well for the farm equipment space.
All right, Kristen, got to leave it there. Really appreciate your time. Have a great weekend. That is Kristen Owen over at Oppenheimer. Now we want to turn to some breaking news now, because Bloomberg has learned that ARM, which is preparing for what would be the biggest initial public offering of 2023, saw its revenue decline about 1% in the last fiscal year. For more, let's bring in Bloomberg Deals reporter Liana Baker, who helped break this news. Liana, what do we know so far?
So it's not a huge surprise, some of these numbers, because SoftBank, as the owner of ARM, has been releasing figures every few quarters to see how the company's doing. But what's interesting here is that we have got in our hands on a draft filing of the IPO that's only supposed to come out for the market next week. And we have sort of through the GAAP accounting standards, which is what we use in the US, we have what we think will be some of the numbers in the filing, although they can still change. And these numbers are slightly different than what SoftBank had published. SoftBank, based in Japan, uses different accounting standards. So these numbers do contrast to what SoftBank has out there, but they're not crazy different, showing a 1% decline for the year for sales ended in the March quarter. But for the March year, but for the June quarter, it does show actually more sales.
More sales. I hope it's more than 1%, Liana, because, I mean, let's face it. I mean, you've been covering this for a while. You all know that when these companies come to market, you know, they're supposed to have that growth on the table here, double-digit growth. We're talking 20, 30, 40%. 1% growth. I know this is a mature company, and the circumstances of it coming to market are maybe a little bit different than what we've seen in the past. Do you think investors are still going to be receptive to it?
This is a very unique story. ARM isn't a startup. It's been around a long time. It had public investors until 2016 when it was taken private. It's diversified its business away from mobile. It's changed its pricing model and products to get into things like the data center and the server market. And it's really a company that is, has exposure to AI and other things. So I think investors will still be interested in this offering, but it's, we can't really say what demand will be. In the coming weeks, the company will start a roadshow, and they'll sort of test the waters to see what price they could have. We don't know at what valuation ARM is going public. We've reported it could be worth up to $70 billion, but really the market will dictate that in the coming weeks.
Yeah, that might be the understatement of the year. Liana Baker, of course, leads our coverage of our deals coverage here at Bloomberg, managing editor for Deals, as we count you down to the close, the kickoff to the close. And guess what, Katie Greifeld? Just in the last 40 minutes or so here, markets have actually flipped from red to pretty much green across the board. The Dow and the S&P fractionally higher here on the day, and while the NASDAQ are still kind of holding on to a modest loss, also starting to show a little bit of strength.
It is worth noting that it is very much a Friday afternoon in the summer. Volume currently off by about 3%, Romaine.
All right, a lot more coverage coming up in a bit. Stick with us. This is Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
In London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Other factors like the Saudi oil and the huge expansion of sports in terms of streaming and be able to get any sports team at any time that you want with today's technology really globalized sports. And so I see the values continuing to increase because you're having people tune in from China to see Messi in Miami, and you couldn't do that 20 or 30 years ago. I lived in Holland in the late 70s, and the best I could get was the International Herald Tribune. 3 days later would give me the sports results from the U.S. World Series, or I'd have to pay $20 a minute to call someone in the U.S. to find out who won a game. So that's a huge advance in my lifetime, where now you can get out your phone and be on the subway in China and watch the Celtics play the Lakers. That's incredible.
That was Steve Paliuca over at Bain Capital talking about the globalization of sports, and he should know because he's been a big investor in that world, a world that has expanded, particularly in the eyes of what's going on this weekend with the World Cup. The final being held this Sunday. England set to face off against Spain head-to-head for what would be their first title win, should they get it. Vanessa Perdomo joining us right now over at Bloomberg to talk a little bit more about not only the match, but really, I guess, the business of sports here and just how big of a deal it's become, Vanessa. We've spoken with Steve Paliuca and a lot of other big investors who have started to pour a lot of money into this, a sport that I'm sure you know wasn't always popular here in the U.S., but has really sort of reached new heights as of late.
Absolutely. You know, in the U.S., the Women's League here has actually gone through 3 adaptations trying to make the success of the U.S. Women's National Team work on a club level. And this is now the 3rd time we're in the NWSL now, but we have major backing from private equity and a lot of money being poured in from people who know money, and they see this as a huge investment. Alan Waxman, 6th Street CEO, is an investor in the new San Francisco team that will be playing next year. And he said that this is by far one of the biggest investments he sees when you look at the ground floor and you look at where it can go.
Let's talk about this World Cup, and let's talk about the women's team in particular, because I understand they exited early. What exactly happened there, and what's next for this team?
Yes, it was quite early. The earliest exit the U.S. has ever had at a World Cup by a huge margin. The round of 16, they usually make it to the semifinal. There's a lot up in the air. People, want to say it was this or it was that, and it really didn't come, we lost in penalty kicks to Sweden, and it really didn't come down to those penalty kicks. We shouldn't have been in that position in the first place. The U.S. typically wins the group. They should have been playing a lesser team in South Africa than Sweden, who is a rival of the team. There was a lot of coaching mistakes that seem to have been made, not a lot of substitutions. There wasn't a lot of tactical, cohesion between the newcomers and the veterans of the team, and Alex Morgan and Rapinoe. So there was a lot going on that this team just didn't gel. And what's next for the team is they already, Vlatko Andonovski, the coach, has resigned, and they are now on the prowess for a new coach, which they might be able to find after this weekend when you look at the third place game and the World Cup final.
All right, Vanessa, really appreciate your reporting here. Vanessa Perdomo, I assume you're going to be up early for that final, so we'll let you go. And if you're a huge soccer fan, Messi Mania, it's coming to the New York City area.
Oh.
If you want to catch it in person,
I'm going to check that out.
It's going to cost you.
How much?
The Inter Miami team, they're playing the New York Red Bulls in New Jersey on August 26th. The cheapest price for a single ticket on Ticketmaster this morning was $496, but some were listed as high as $10,000. It's like he's Taylor Swift.
He's making more than Taylor Swift too, I think, right?
Is he?
Maybe,
I would love to see those financials.
This is interesting. I'm not sure I would spend that kind of money, but you understand where the excitement is coming from. Though I think it's interesting. This is like typical New York fashion. So the Red Bulls put out a tweet, or whatever we're calling it now, basically saying, don't show up in all your Messi jerseys and sit in our section. You better be wearing Red Bull colors and not root for Messi. The only reason they're going is to see Messi.
Are they going to enforce that? How do you possibly enforce that?
They're going to enforce it in the typical New York fashion.
They're going to muscle you.
Well, actually, it's New Jersey fashion, because they're not even really in New York, right?
No.
And you folks from New Jersey can be pretty
New
tough.
Jersey is not actually New York.
Yeah, I once got into an argument with someone in New Jersey.
Yeah, in New Jersey.
Yeah, that's why I live in New York now. I don't cross the river anymore.
They don't let you there anymore.
Yeah. All right, let's check in on the markets here. We're oscillating between gains and losses here on what is, yes, of course, a very low volume day here in the doldrums of August, but the big uptick that we saw in yields earlier this week having outsized effects, not only on equity prices and risk asset prices, but on market sentiment as well. A full breakdown of our coverage as we round out into the final hour of trading. Romaine Bostic alongside Katie Greifeld.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Good afternoon, everybody. Live from the Bloomberg Interactive Brokers studio, streaming on YouTube and Bloomberg Originals. We made it. It is Friday, August 18th, 2023. I'm Carol Masser. Tim Stenivek is off today, and with us is Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metton. And Jess, I got to say, I was saying to our producer, Sarah Livesey, who is in for our producer, Paul Brennan, on this Friday, is that I thought it was supposed to be quiet.
It's been
Fridays
a very
in August.
busy day, week, and I know everybody's focused on obviously how stocks are going to close up the week. We still have about an hour before the close, but the S&P 500 giving back some of those losses. So right now, instead of the potentially biggest loss since March, we are looking for the biggest loss actually just since earlier this month. So not quite as sexy of a size and scope there, Carol.
Sorry for everybody's watching on YouTube and Bloomberg Originals. I had to lick my finger because for some reason the finger sensor is just not working on the Bloomberg, which means I can't get into anything, which means it's really difficult to do my show. So
this has happened to me before. Don't worry about it, Carol.
I got
it worked.
I can move on. All right, so we are going to talk about the markets. Just as talking, right? The S&P on track for its third consecutive week of losses. We did see that move up in global rates. It's like everybody got the memo that, folks, we're probably going to see higher rates for longer and just get used to it. Having said that, China was a big story this week. We're going to get to the latest headlines we're going to ask the question, because a guest asked the question, is China starting to collapse? Is that ridiculous or a reality, Jess?
And then also thinking about how China certainly is a topic at a historic meeting between President Biden and the two PAC rim leaders, and we're supposed to get some
They're
more
not
news
there,
out of that shortly.
but it's a topic.
Yes, so that's going to be top of mind. Plus, we'll tell you how the QQQ makes Invesco no money, so it created a family of baby Q. So can't wait to get more into that, Carol.
All right, so that is in the new issue of Bloomberg Business Week. And also, we're going to get into commercializing quantum technology. We're all agog with AI, but what about when it comes to quantum tech? We're going to get into that. We also are going to find out what it is like, firsthand experience, to be an Afghan girl who risked everything for education, truly put it all on the line. It's the subject of a new book. And then another edition of what Matt Miller is driving, who I think might be on his way driving home. Who knows?
I hear that. I hear that. He decided to use potentially the Zoom instead of an office. It's okay, though. We'll forgive him.
It's okay, as long as he's driving something. We'll get the details on that in just a moment. But keeping an eye on the markets in what's been another crazy week of a lot of news, a lot of headlines. We've got stocks off their lows of the session, but really not doing much here, but really yields a story. Countdown to the close, though, starts now.
To the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Jess Metton in today for Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms, television and radio included. And Carol Masser, interesting day, interesting week, we should point out, for risk assets across the board. But I think the pullback that we've been seeing in equities really since the start of the month, quite remarkable.
Yeah, thanks for that setup, because that's exactly where I want to go. I'm going to go macro, going to go wide, all around the world, right? We've seen, it seems like, a reset, certainly when it comes to the global sovereign trade, but also when it comes to what we're seeing in global equities. We're talking about the MSCI World Index. We're going to bring it up for you. This is all of the developed markets. So for those who are watching on TV and YouTube and on Bloomberg Originals, you are looking at it being down about 2.6% for the week. Overall, down about 3 weeks in a row, down 5% in the week of the August. But we're talking about the biggest weekly loss since March. So, Jess, we are definitely seeing a reset, a rethink when it comes to global yields, and that's certainly playing out in the global equity markets as well.
And looking at yields, the 10-year had pulled back from Thursday's levels that were approaching the highest since 2007, but something Carol and I have chatted a lot about, especially in recent days. I was just pointing out what we've seen, especially in the dollar over the past month. Obviously, we saw it peak out last September, which obviously correlated with some of these improvement we've seen in the equity market, obviously, this year. But then we've continued to see a bit of strength in the shorter term, and that, along with obviously what we're seeing with the complete pressure there, especially with yields spiking there, different dynamics as far as pressuring the stock market.
Yeah, and this really comes back to valuations here. But interesting interesting too that when we talk about those technical levels, everyone's focused on those moving averages. But we should point out the relative strength indicators, kind of across the board, are hitting oversold conditions. And the last time we had something like that happen, remember late last year, we had a huge rally in equity, at least here in the U.S. in equities.
And we'll see if those technical levels kick in. Of course, this is a seasonally weak time for equities. You're definitely seeing that in the month of August. But I want to stay global here, and I actually want to go micro and talk about a specific company. We're talking about Adyen. This is a Dutch payments processing company. One of the big stories of the week, of course, that $20 billion share plunge that we saw. If you take a look at Wall Street, no one saw it coming. Actually, the majority of analysts had a buy or equivalent rating on this company. And the few that had a sell kind of looked optimistic, too, if you take a look at the actual commentary. And I don't know, it kind of gets to the point of how much analysts and economists, for that matter, whether they're any better than, some of the weathermen.
Well, it gets to the idea, though, too, of what the company actually guided to. I mean, that's the whole point of why these companies are supposed to do this and give guidance. And the co-CEO actually did get on the phone with Bloomberg reporters, and he basically admitted that, yeah, we lost some trust.
Yeah, and I guess it's just a reminder, right, that especially, don't you guys think about the environment right now? I feel like all of a sudden in the last few weeks, we've had everybody running out and talking about, certainly here in the U.S., no recession, no this, no that, and like everybody kind of resetting some of their, outlooks. And it's a reminder that, we're all kind of guessing, I feel like, in a big way in this environment and trying to figure out what the Fed does, where the economy goes from here. We count on analysts and strategists to guide us, but in many ways, there's a lot of questions out there that makes predicting whether it's a call on a company or a call on the outlook sometimes really difficult.
And I always like
and they can miss a lot.
That is true. If you look at the ECFC function in the terminal, I like to look at that to gauge where obviously the aggregate of economists are thinking where the economy's headed. But if you look at a quarter-over-quarter basis, there's no longer those contraction that we would have seen in the third and fourth quarters anymore. So you're seeing, especially economists, lifting those targets.
What I really wanted to talk about is why, Romaine, are you dissing New Jersey again? Come on, Katie, we're both New Jersey folks.
I love that Carol, just has it on. She really watches the first hour of our show.
Which is kind of scary because I realize that I say so many.
I actually like you guys. I like to watch.
There you go.
Oh, my goodness.
Okay.
Like it
All
while
right.
it lasts.
Where are you from, Jess?
Texas.
Come on.
Really cool.
You didn't know?
That's cool.
Yeah.
That's cool. That's really cool.
It is really cool. All right.
I spent a few days in Texas. It was like the longest month of my life.
Great. Everything's bigger and better in Texas.
We're coming for you, Romaine.
Yeah.
I'm just saying.
We are.
New Jersey folks and the Texas folks. All right,
ready
guys.
for the pop quizzes later, too.
Yeah, we're getting ready. All right, we're going to be back in less than an hour's time. We're going to wrap up the week, the day. Join us at 4 p.m. Wall Street time, radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We'll be there at 4 p.m. Wall Street time.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, it is a busy Friday afternoon. Our thanks to our TV colleagues. We're going to wrap up the trading day in less than an hour's time. In the meantime, we're also on watch for a press conference by President Biden. It's a historic day. First time President Biden is hosting foreign leaders at the iconic presidential retreat in Maryland. We were talking about Camp David, and the first time that 3 specific leaders are meeting formally and exclusively as a tripartite group, if you will. So let's get to it, and let's see why it is so significant. Jody Schneider is Bloomberg TV and Radio Political Director. She joins us from our Bloomberg Washington, D.C. Bureau. Jody, good to have you here with Jess and myself. This is a moment in history, is it not?
Yeah, it is for several reasons. Well, first of all, since 2015, we have not had foreign leaders at Camp David in Maryland, and as we know, it's been a place, kind of an iconic place where the Middle East pacts have been negotiated, that kind of thing. So the fact that we're seeing this again there is important, and also that Japan and South Korea are moving behind some of their historic tensions to be able to come to a summit, to this trilateral summit, is also significant. Even a few years ago, it would have been difficult to imagine that they would all be sitting down to kind of come up with essentially some really significant talking points and significant agreements, which we've just seen in the statement that the White House has put out.
Jody, walk us through some of the particular and expected developments and announcements that we are expected to hear from the Biden administration soon.
Yes. So basically, we have seen from the White House, they're supposed to be, coming to speak with us anytime. We see the podium set up, that kind of thing. We're not seeing the leaders quite yet, but the leaders signed off on what they're saying, a shared vision for their partnership as well as for the Indo-Pacific and beyond. This is somewhat security agreements that are included in this, security cooperation as they're calling it, but also some economic cooperation and reaffirming the importance of peace and stability across the Taiwan Strait, which was also important language in this communique.
I think it's such an interesting meeting, coming in an interesting week with the flurry of headlines that we've had out of China, the worries, the concerns, and then also in a week where our own editor of the Bloomberg Businessweek, Joel Weber, his interview with the vice president of Taiwan, their concerns about keeping peace with China and their roles certainly in the global economy because of their importance when it comes to global semiconductors and manufacturing of such. But I just think there's so much going on in the region, Jody, so that the three of them are coming out with this kind of physical presence. I'm just thinking of, the video and the message that maybe perhaps it sends to China.
Yes, and it's very well, directed at China. Of course, for Japan has been much more in the U.S. camp on China and on Taiwan, for that matter, about really kind of standing up to China on some of these principles, particularly in the security measures. With South Korea, it's more complicated. They are very dependent economically on China and trade with China and China, buying their goods, that it's a much more difficult relationship for them. And that's been part of what has been, people have thought impressive about South Korea showing up at this summit, that to take on China, which they are through this communique and by their presence here. And then on North Korea as well. That's the other thing. And they're all three, of course, much more united on that. But this was a message to the North Korean leaders as well.
Talk to us about some of the shared challenges between Japan and South Korea when it does come to North Korea specifically.
Yeah, I mean, these are security concerns, quite frankly, that North Korea, which, has taken and will continue to take advantage of these kinds of meetings to try to show some of its strength. But basically, this is the three of them together are making it very clear. The statement says they reaffirm the commitment to the complete denuclearization of the Republic of Korea in accordance with UNSC resolutions and urge it to abandon its nuclear and ballistic missile programs. That's a pretty strong statement, and that's from the three of them, basically saying they want complete denuclearization from North Korea.
I do think about, Jody, the upcoming elections, the presidential elections. We know we've got the Republican debate next week, and so we're focused on that. But I do think about when it comes to President Biden and, his platform, U.S. economy and what's going on overseas. There's so much going on. How important is this in terms of what's going on in China specifically, or meetings like it is with the Japanese Prime Minister and the South Korean President? How important is it really to the voting public?
I'm not sure that, the voting public in more than a year from now is going to, probably remember all that much about what happened today at the summit, let alone vote based on it. However, for President Biden, this is a way to revert to a place where he feels comfortable, and that's foreign policy.
All right, Jody, hang on a second, because we are watching President Biden and the two leaders walk up to the podium. Let's head to Camp David.
Good afternoon, everyone, and welcome to Camp David. If I seem like I'm happy, it's because I am. This has been a great meeting. Mr. President, Mr. Prime Minister, we meet in this historic place to make a historic moment, and I believe that to be true. This is a new era in partnership between Japan and the Republic of Korea and the United States. Our new Camp David trilat That's what we have here. But before we dive into the progress we've made today, if you excuse, we used to say in the Senate, a point of personal privilege, I want to start by expressing my appreciation for the contribution that your countries have made toward the relief following the devastating wildfires in Hawaii. I want to thank you both on behalf of the American people. I also want to note that my team is closely monitoring Hurricane Hillary, which has the potential to bring significant rain and flooding to Southern California. FEMA has pre-positioned personnel and supplies in the region, and they're ready to respond as needed. I urge everyone in the path of this storm to take precautions and listen to the guidance from state and local officials. And you've heard me say it before, the Republic of Korea and Japan are capable and indispensable allies. Now to the purpose of why we're here. America's commitment to both countries is ironclad, and my personal commitment to bringing these three nations together was real from the very beginning. Since last summer, we've met on the margins of the NATO summit in Spain, the ASEAN summit in Cambodia, and the G7 summit in Japan. Today, we've made history with the first ever standalone summit between the leaders of our three countries, as well as our commitment to meet together on the leader level annually and to have all our relative cabinet member people meet on a regular basis from this point on. Not just this year, not next year, forever. That's the intention. And so I want to recognize the important work that both of you have done and the political courage, and I mean this sincerely, the political courage that you both demonstrated to resolve difficult issues that would have stood in the way for a long time of a close relationship between Japan and Korea and with the United States. Your leadership, with the full support of the United States, has brought us here because each of you understands that our world stands at an inflection point, a point where we're called to lead in new ways, to work together, to stand together. And today I'm proud to say our nations are answering that call. First, we're elevating our trilateral defense collaboration to deliver an Indo-Pacific region that includes launching annual multi-domain military exercises, bringing our trilateral defense cooperation to unprecedented levels. We're doubling down on information sharing, including on the DPRK's missile launches and cyber activities, strengthening our ballistic missile defense cooperation, and critically, we've all committed to swiftly consult with each other in response to threats to any one of our countries from whatever source it occurs. That means we'll have a hotline to share information and coordinate our responses whenever there is a crisis in the region or affecting any one of our countries. And today, we've all reaffirmed our shared commitment to maintaining peace and stability in the Taiwan Straits and addressing economic coercion. We're going to continue to counter threats from the DPRK, including cryptocurrency money laundering to the tune of billions of dollars, potential arms transfer in support of Russia's brutal war against Ukraine. And together, we're going to stand up for international law, freedom of navigation, and the peaceful resolution of disputes in the South China Sea. Second, we're expanding our economic cooperation to build an Indo-Pacific that is peaceful and prosperous. Today, we've committed to launch a new, what we call a supply chain early warning system, supply chain early warning system pilot, and which will alert our nations to disruptions of certain products and materials like critical minerals or batteries, so we can get ahead of the issues as they appear with the experience that we've experienced during the pandemic. Excuse me, this is falling off. There you go. And building on the G7-led Partnership for Global Infrastructure and Investment, we're deepening cooperation between our development finance institutions to mobilize more financing for quality infrastructure and secure communications technology to help low-income and middle-income countries throughout the region take on the challenges that matter most to their people. And finally, our partnership is about building a better future for our people. That's why we're deepening our cooperation on global health and launching a trilateral expert exchange in support of the U.S. Cancer Moonshot Initiative. That's going to, I believe, change cancer as we know it. It matters a great deal to me and to families all across our 3 countries. In the United States, we are revolutionizing the way we do cancer research, and together, the 3 of us, I'm confident we can harness our shared spirit of innovation and end cancer as we know it. We're also launching a new collaboration between our national laboratories and advance our science knowledge and technological capabilities together. As we do, we'll work in lockstep to set the standards for safe, secure, and trustworthy emerging technology, including artificial intelligence, which a lot of work has to be done on. Let me close with this. Mr. President, Mr. Prime Minister, this is the first summit I've hosted at Camp David as president. I can think of no more fitting location to begin our next era of cooperation, a place that has long symbolized the power of new beginnings and new possibilities. In the months and years ahead, we're going to continue to seize those possibilities together, unwavering in our unity and unmatched in our resolve. This is not about a day, a week, or a month. This is about decades and decades of relationships that we're building. Mr. Prime Minister, Mr. President, I want to thank you for your leadership, and I say it again, for your courage that brought us together. And I look forward to working with both of you ahead. Now I will yield to, who am I yielding to?
Distinguished guest, the President of the Republic of Korea.
All right, everybody, you have been listening to President Biden. He is there at Camp David in Maryland. As we said earlier, a historic day. First time the president is hosting foreign leaders at that iconic presidential retreat. And it really is the first for those 3 specific leaders. We're talking about, of course, President Biden, who you just heard making some opening statements, and then the Japanese Prime Minister, Fumio Kishida, and then, of course, the South Korean president, President Un, and they are meeting there, and it really is marking collaboration, Jess, between the 3 nations in particular. Carol Massar, along with Jess Matten, in for Tim Stanovic on this Friday, and specifically just talking about cooperation on different things, whether it's political, whether it's talking about nuclear when it comes to North Korea specifically and concerns there with their proliferation, nuclear proliferation, and then also talking about cancer specifically in terms of cooperation. Wide-ranging, to say the least. All right, let's get back to our Jody Schneider. She's Bloomberg TV and Radio political director. She is there in Bloomberg's Washington, D.C. bureau. She's been listening along as well. Some quick comments, Jody, by President Biden, and of course, we're monitoring those comments by the Japanese Prime Minister as well as the South Korean president. Then we'll get back live there to Camp David for the press conference. What jumped out for you and what's significant?
Well, I think that the president was underscoring kind of the history-making nature of this, that it was really a first-of-a-kind summit between these 3 countries, and they're at that beautiful backdrop of Camp David. They're without a tie, looking like he maybe was at camp. He was still wearing a suit but no tie. But he basically called it a new chapter of the security cooperation, and praised the political courage of both the South Korean president and the Japanese Prime Minister to move past some of this historic tensions those 2 countries have had to come together to do this, to make these agreements. They've signed a communique where they say that they will cooperate in security agreements and in some other ways as well, particularly opposing what it says in the joint statement is a dangerous and aggressive behavior by China as it exerts itself in the East and South China Sea. So I think that was an important point there.
Jody, hang on for a second, because
North Korea.
I think we all have to pull out our history books, because I kind of forgot about the tensions between Seoul and Tokyo, but they go back, to World War II or the end of World War II?
Well, and even before that, from the Japanese occupation starting in 1910 and all the way through World War II. And only a few years ago, when Japan was making apologies for some of that behavior during World War II, the South Koreans were reluctant to accept that. They wanted certain wording of the apologies. So we've had a lot of tensions there, even as the two countries have come together economically and on trade. But there have been a lot of tensions, and it is only really recently, and this current president of South Korea, has said he wants to really ease those tensions and come together. And so the fact that he has, laid some of that groundwork to do that allowed this summit to take place as well.
And so we know about historically how there have been these frosty relations between South Korea and Japan, but what was it that helped it thaw recently? Was it because of China's assertiveness in the Pacific?
Yeah, some of that is the case, and some of it is that this president, this South Korean president, even more so than his predecessor Moon, had wanted to end this, had wanted to come together, and Japan has worked to do that as well. So I think some of that is the personalities here, but also, as you note, needing to do that to stand together in the region, both against North Korea, aggression there, but also on China. No, but it's a more complicated relationship for South Korea with China than it is for Japan. First of all, they rely so heavily on China economically, particularly with trade, and South Korea has not come out in the same way as Japan has against China in terms of some of the military wording and military concerns, and also on Taiwan, it has been harder for South Korea to go along with the U.S., but they seem to be somewhat in this communique. They do talk about they do talk about Taiwan in this that was signed that was announced at the end of the summit.
Jody, what would you, if you were there as part of the press corps, ahead of those, in front of those three leaders, what would be your number one question, top of mind?
It would be on China, and I would want to ask that to the South Korean leader, whether he is in agreement now, whether he can say that South Korea is in agreement on the same stance with the U.S. and Japan toward China, or what were those discussions like? You'd like to be a fly in the wall, or a little birdie for that.
Right, and in that statement from the White House, it was noted, we reaffirm the importance of peace and stability across the Taiwan Strait as an indispensable element of security and prosperity in the international community, recognizing that there is no change in our basic positions on Taiwan. We call for a peaceful resolution of cross-strait issues. So it's always that delicate, careful dance. But really great to get your perspective as always, Jody. Thank you so much. Jody Schneider, she's Bloomberg TV and radio political director at our DC bureau here at Bloomberg News. All right, so we're continuing to monitor that press conference with President Biden and the Prime Minister of Japan and the South Korean president. As soon as they begin that press conference, we'll take you there live or back to Cam David. In the meantime, we can't forget about the markets, folks, because it just, has been quite the week. And it does feel like global bond traders have come to the realization that rock bottom yields of recent history might be gone for good. So let's get to it, because we've seen some significant moves, certainly even in, of course, the U.S. Treasury trade this week. With us is Bloomberg News rates reporter. He covers the bond market, Michael McKenzie, with us on Zoom in New York City. Michael, good to have you here with us. Jess, on our planning call, was like, you got to talk to Michael. He would be really good on this. So here we have you.
The best.
How are you thinking about the week overall?
I think it's been a big week. It's clearly the moves have been large, and you'd expect to see some kind of stabilization, which we have seen today. But I think the action will ramp up again next week. I think what we're seeing here in the bond market is a growing realization that we are going back to the future, so to speak. We're going back to the pre-global financial crisis period when yields were higher, and now with inflation stickier, and also with a government deficit problem. The U.S. Treasury market is now 25 billion and 25 trillion and counting, and that's a lot of debt, and it's going to continue to grow. And the market's now saying, well, we have a fiscal problem because unemployment is at close to record lows. So in theory, tax receipts should be flowing and the economy is growing well. But instead, you've got a fiscal problem, which normally comes when you go into recession. So I think what you're seeing here is the bond market is beginning to wake up and smell the coffee, so to speak. And it's interesting, we've now heard from people such as Ed Yardeni, who coined the term the bond vigilantes in the 1980s when he was covering the market. And he was speaking on Bloomberg TV this morning, and he said the vigilantes are back. So I think as we look ahead to next week, we've got a couple of very important auctions coming up, and then we get to hear from Chairman Powell on Friday. And it will be important to hear what the Fed thinks of the recent rise in long-end rates, and what is the sort of market message that they're taking from that.
And you mentioned some of these different sales next week in the bond market, specifically looking at the 20-year bond sale and then the 30-year tip sales. How do you think the bond market will end up reacting to this?
Well, this is going to be interesting because clearly yields have risen a lot in the last few weeks, particularly this week. So to sort of coin the classic economist phrase, on the one hand, these issues are pretty cheap, right? If you're buying 30-year tips, you haven't seen a 2% real yield since 2011. On the other hand, however, you're going to be asked to buy two auctions which are notorious for not having very good demand at the best of times. August is typically a poor month for liquidity, and that actually does explain some of the price action we've seen this month so far. A lot of people are on holiday, a lot of people are away, so that doesn't help the liquidity. So dealers are going to be very conscious here of trying to cheapen up those auction prices as much as they can, i.e. the yields will go up in order to sort of accommodate hopefully a good customer interest. So we'll have to see. But the auctions are tricky, and most people on Wall Street are, they're not that confident if you talk to them about it.
How much do you think China is playing into all of this, the concerns about China? Just kind of another thing, Michael, if you will, layering on the global worry list.
Well, I guess China, it is a concern, but don't forget China is pretty well insulated from the global financial system. It has it has a currency peg. Also, if China does have to defend that peg and sell treasuries, that would be mainly in the front end of the curve. Where we're seeing the sell-off is really in the 10-year plus sector of the curve. So I think at the margin, it's there, but it remains to be seen just how big a deal China will be for the US.
One thing, if I can add, go ahead, please. Yeah. No, please continue.
No, but I think part of this too is that you are seeing, there is a sense of the US exceptionalism here. US economy is growing better than most places. It's got a central bank that has brought inflation down a lot. But again, it's got a fiscal deficit problem now that's becoming more and more apparent. And these are really the factors that are driving the bond market.
Yeah, I do wonder, it's interesting, to see Ed Yardeni back and the bond vigilantes, because I feel like we've done this before, but I do wonder, is there something different? Forgive me for really using a poor phrase that we all kind of like roll our eyes at, but is there something different this time around because of the levels of U.S. debt? And I thought what really struck me was where you started, this idea that tax receipts from, everybody, it's a tight labor market, we should be this is kind of as good as it gets, and yet we're concerned because the debt levels are really problematic.
Yes, I mean, at the same time, I think a lot of people who began this year, particularly in the bond market, thought the US would be in recession by now, that the Fed would be actually cutting rates. If you think back to January, that was the playbook. So people were very happy buying a 10-year treasury that was yielding, I guess, well below 4%. And today it's, 4.25. So clearly, though, the economy has surprised, and I think it's surprised a lot because there's an incredible amount of fiscal stimulus still coming through from the rather unfortunately named Inflation Reduction Act. That's a lot of money that's still pouring through the economy, coursing through the veins of the economy. And it also means for the Fed that while they are winning the fight against inflation, I guess they've taken the sting out of inflation. It has come down quite a lot since it peaked last September. The problem for the Fed is that what if it only really sort of gets back to around 3% and that's it? And are we now in this new era where actually we're not going to get sub 2% inflation like we saw in the previous decade? We're actually going to get sort of 3% inflation. And then on top of that, it's not just the current spending that's the problem. It's the fact that if you look at the CBO forecasts, the entitlement programs, all the spending that's expected to keep on picking up and increasing over the rest of this decade. And that's where people like Ed Yardeni are saying, hang on, we've seen this before. And I said, I'm sort of old enough to remember when I first came into the market, the early 90s, the Clinton administration had big plans to roll out healthcare and a big stimulus package when they were inaugurated in early 93. And the market said no. And of course, that led to James Carville famously saying, well, in my next life, I want to come back as the bond market because I can intimidate anybody. And I think we're sort of in that sort of period again. And it's going to be very interesting to see just how far the bond market does flex its muscles here.
So then what is the bond market telling us where the economy is headed?
Well, I think the economy is resilient. It's definitely got a fiscal tailwind behind it. I think also the other important factor to bear in mind here is that because rates were so low before last March, when the Fed embarked on its rate hiking cycle, a lot of companies, and in particular, a lot of households, refinanced long-term debt at all-time lows. You look at the housing market, so many people have refinanced a 30-year fixed-rate mortgage below 3%. They're not going to move. They're not going to sell their houses. So they're insulated as long as they have jobs. Companies have also expanded and termed out their debt, and they took full advantage of very, very good borrowing conditions in 21 and 22. So I think that's going to help the economy. So ultimately, I guess the key threat here would be, do you start to see a pickup in unemployment? And here the jury is out because we've seen a big retirement wave. There does seem to be a problem in companies being able to find the right kind of workers. So this is really a supply problem for the labor market. And if that keeps wages, ticking along at, plus 4% annual growth, that's going to be a worry for the Fed too. And in fact, I recently interviewed Dan Iverson at PIMCO, and for him, while he believes the economy is going to slow down and ultimately move into a recession, he does flag the fact that if wages continue to stay strong, that's going to create inflationary problems for the Fed. And so that's something he's watching, as are other bond managers. And I think ultimately, if we do see rates continue to rise, then you are going to get a recession because obviously rates will reach a point where it does finally start to weigh on the economy and economic activity. But I think what's concerning the bond market now is that we've had 500 basis points of rate hikes from the Fed since last March, and it hasn't slowed down the economy. So while it was considered last year to be a bit of a joke for someone to say maybe the Fed's going to have to go to 6% or 6.5%, that is still potentially out there as a tail risk for this market. And I think that's where you're seeing the pressure on the back end now. Long end rates starting to catch up because they can't stay so far below where the Fed's currently pegged its overnight borrowing costs.
It's funny. Was it Neil Dutta earlier in the week kind of talked about this after the FOMC minutes came out, and in the minutes it said a number of participants judged that with the stance of monetary policy in restrictive territory, blah, 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 blah. And he said, how can these people possibly know that the stance of policies in restrictive policy, I have a difficult time seeing that when the unemployment rate is low and the economy is growing above trend. Like, it's just very, very tricky out there, and it is tricky for the Fed. That puts pressure. I want to go back, though, to something. Oh, actually, forgive me. Michael, we appreciate your time and input today and talking to us about this. We do want to go back to Camp David because President Biden, with two leaders from the PAC Rim taking questions, we want to take everybody back there. Michael, thank you. Let's go back to Camp David.
Be about a robust American commitment to a nuclear umbrella when the commander-in-chief who preceded you and is looking to succeed you spoke openly about reducing the U.S. footprint in the Korean Peninsula. President Yoon, how much confidence can Japan and the U.S. have about Seoul's long-term commitment to rapprochement when polls show the solid majority of Korea disapproves of your handling and mending of the forced labor issue? And Prime Minister Kishida, what assurances can you give to your country's citizens who fear bolstering your security cooperation in this matter could lead to the country into an economic Cold War with China? And if you'll indulge me, Mr. President, on a domestic matter, what is your reaction to the special counsel appointment last week into your son? Thank you.
Well, first of all, look, there's not much, if anything, I agree on with my predecessor on foreign policy. His America First policy, walking away from the rest of the world, has made us weaker, not stronger. America's strong with our allies and our alliances, and that's why we will endure. And it's a strength that, quite frankly, increases all or three of our strengths. This is just about one summit. What makes today different is it actually launching a series of initiatives that are actually institutional changes in how we deal with one another. And security cooperation, economic cooperation, technology cooperation, development cooperation, consultation exercises, and all of this will create its own momentum, I believe, year by year, month by month, to make the relationship stronger and more certain to remain, to be in place. And with regard on these results, I think are going to keep it going, and I think they're going to benefit all our countries. And with regard to the second question, I have no comment on any investigation that's going on. That's up to the Justice Department, and that's all I have to say.
제게 하신 질문에 대해서는
To the question that was directed to me, I would like to say that the treaty made between Korea and Japan that was made in 1965 and the following measures by the government and the Supreme Court's ruling in 2015 has some differences, but we have already implemented measures to bridge the gaps among them. And in South Korea, of course, there is public opinion that is opposed to the government's measures like that. However, from a perspective that's forward-looking, strengthening ties and improving relationship between Korea and Japan are important, and there is a shared understanding that this matters to our bilateral relationship as well as our future, and this is something we need to continue working on.
Thank you for the question. First of all, at today's meeting, the rules-based international order and activities inconsistent to such rule-based international order and activities, the concerns have been shared, and the rule-based free and open international order must be defended. And going forward, U.S.-Japan ROK strategic collaboration will be reinforced even further. Such endeavors will continue going forward. Our country and for the surrounding countries, the response capabilities as well as defense capabilities will be bolstered, and by doing so, the lives and livelihood of our population will be protected, and the sense of assurance must be raised. These are the important activities. Having said that, with regard to China, last year in November, there was the Japan-China Leaders Summit, and there was a positive momentum. By maintaining the positive momentum, what has to be asserted will be asserted, and we shall strongly request responsible conduct. And we will continue and accumulate the conversation about multiple issues. We will cooperate with regard to common challenges. Such constructive and stable relationship will be established by mutual effort. That is my administration's consistent policy. Based on this perception towards regional stability, our efforts will continue. Thank you.
President Yoon.
All right, everybody, you are listening to a live press conference from Camp David in Maryland. Those last comments by the Japanese Prime Minister Fumio Kishida. He is there, of course, with President Biden, as well as the South Korean President Yoon. For the first time, these three leaders coming together in a meeting and representing really a shared vision for a partnership for the Indo-Pacific and beyond. In fact, that's exactly what we heard in a statement from the White House. We'll continue to monitor that press conference and, of course, bring you any headlines as they are known. You are listening and watching Bloomberg Business Week on radio, on YouTube, and, of course, on our streaming service, Bloomberg Originals. I'm Carol Massar, along with Jess Metton in for Tim Stenovic, and this is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 15 minutes to go until the closing bell. Carol Massar along with Jess Metton live in our Bloomberg Interactive Broker studio on YouTube and Bloomberg Originals. As we said, Jess is in for Tim Stenovic, who's off today. And Jess, I'm looking at an equity trade here in the U.S. Little change, a little bit higher, but we're seeing some buying into the close. Go figure.
And now the S&P 500 on pace for its worst week since early August. It had been the worst week since March, right? So, hey, there we go. But, yeah, you'd think for a Friday afternoon, but things coming off the lows there for the broader market.
Yeah, and if my understanding was volume up a little bit today?
Yes, it was. And also you'd think a summer Friday, right, where volume tends to be lighter.
I don't know. It's really kind of wacky. And right, we have seen volumes down, and I'm looking at the major industry groups in the S&P 500, specifically energy, your outperformers. You've got more major industry groups in the S&P 500 actually showing some gains versus those to the declines.
Right, and communication services, those are obviously more growth-oriented sector. That went down close to 1%.
All right, let's get to it, guys. The drive to the close with about 14 minutes left in the trading session. Sam Dunlap is with us. He's Chief Investment Officer at Angel Oak Capital Advisors. He joins us on Zoom in Atlanta. Sam, good to have you here on this Friday. It is an interesting day. We hoped, fingers crossed, after a rather dense week that it would be a little bit quieter, but that's not the case. How are you thinking about the trade here? First of all, let's talk about the U.S. market specifically. I think the S&P is on track, as just said. Not a great week, but we're down about 3 weeks in a row here. What does the reset, it feels like, in U.S. equities tell you? And really the reset, if you will, in U.S. yields?
It's definitely, in our view, a function of yields. You know, where we focus is fixed income and not necessarily the equity markets. But I think equities have clearly been under pressure this month and this week, just given the recent rise that we've seen in risk-free yields over the month. I mean, just for August alone, you know, Treasury yields are up 4 to 35 basis points across the curve, and that's really been pressuring clearly stocks and other risk assets here. But we think it's pretty interesting as an opportunity as risk-free yields and 10-year note yields, for example, have reached the highest level we've seen since 2007. So risk-free yields present a huge opportunity in our view. And while, you know, there may be further room to run here, perhaps at rates on the long end, we think it's a pretty historic opportunity, particularly in areas of mortgage-backed securities where yields are even higher, even in government-guaranteed mortgage-backed securities today.
And so you just mentioned the positioning there as far as what you see in opportunities when it comes to those risk-free type of rates. Where are you shying away from and alternatives that you don't want to necessarily advise clients to buy at this point?
Yeah, where we've been focusing is clearly in quality and shorter duration areas of fixed income where you can get these equity-like returns, as I mentioned, you know, with risk-free rates surging to the extent that they have after 2022 and into 2023. You know, investors don't have to take a tremendous amount of credit risk here or even just convexity risk to earn, you know, high current yields in the, you know, 6 to 9% range. So, you know, we're focusing on higher quality, and within the subsectors we focus on in the securitized credit space, really focused on mortgage-backed securities here, bonds backed by residential mortgages, but definitely cautious towards areas, for example, within the CMBS space, just given some of the concerns that we have in underlying commercial real estate.
I know you're not calling outright for a pending recession in the near term. How do you view the recent batch of economic data that we've seen that shows there's still a resilient consumer out there, especially when you're looking at those retail sales numbers and then hearing from some of the corporates, especially on the retail side with Walmart and others this week?
Yeah, the consumer has been extraordinarily resilient and definitely, exceeded our expectations this year. We've been generally favorable towards the consumer, particularly in the post-COVID era. We did start, getting a little more cautious towards, the consumer that's been a little more impacted due to the inflationary pressures and the lower real wage growth that we were seeing. But that's really starting to change, particularly as it relates to inflation coming down. Most recently, we expect inflation to continue to fall, which should bolster real wages looking forward. So, the consumer has definitely shined. And I would say one thing that market participants, I think, are beginning to really appreciate is just the lack of interest rate sensitivity on consumers' balance sheet, given, typically the largest liability for U.S. borrowers is their home. And the weighted average mortgage rate today is around 3.5%, and the vast majority of that, over 90%, is fixed rate. And I think that's provided a tremendous amount of resilience for consumers, given the swift pace of Fed tightening that we've seen, not only on the front end, but through quantitative tightening. But we are growing increasingly cautious given how fast the Fed has gone, and particularly as it relates to asset prices, generally speaking. But we do think housing is going to be extraordinarily resilient here, just amid this recent tightening we've seen, really related to the stability in the mortgage rates that's bolstering the consumer as well.
Hey, where's money flowing among your various investment options? You've got a bunch of mutual funds. As you said, you're really all about yields or the function of yields in terms of investments. You've got an income ETF, an ultra-short income ETF. You've got a multi-strategy income fund. Where is the money flowing, and what kind of flows? Are we seeing money move out of the safety and security of money markets, or perceived safety and security of money markets, and where is it flowing, if it is?
That's a great question. Yeah, industry-wide and just across the bond complex or the fixed income complex, you really saw a huge amount of outflows in 2022, and you saw a nice surge, I would say, at the beginning of this year from a flows perspective, into fixed income. But the vast majority of the flows, as you well know, have really gone into the front end of the bill curve and into money market funds. I think global money market funds are approaching $925 billion on a year-to-date basis. So the vast majority of global investors are still hiding out on the front end of the curve. But we think, we are definitely in the camp that we are at or near peak policy, and encourage investors to really consider extending duration in both,
You think you're at peak policy, even though the world is kind of thinking about a reset of, we were just talking with our Michael McKenzie that maybe that 2% inflation just doesn't make sense. Maybe it's more like a 3% inflation world. Do we need to start kind of embracing, are you guys embracing the idea that maybe it's a different higher reset when it comes to inflation, and that means maybe a different investment thing?
Perhaps over the medium term. I think in the near term, though, we expect inflation to come down pretty significantly towards the latter part of this year and into 2024, as the shelter component of the inflation data continues to roll over pretty hard. As it's been very well publicized, it's definitely a lagging part of the inflation component, and we're seeing rents falling very fast, and obviously home prices have come off the recent highs that we experienced after COVID. So as that shelter component really filters into the inflation data, we think that's going to be very supportive to a Fed narrative that will be approaching a potential slower growth scenario as we head into end of this year and into early next.
Sam, I have to ask, what's the top question you're hearing from your clients?
the top question we're getting is why are mortgages generally so cheap in today's market? Agency mortgages in particular have gotten a lot of attention, especially on Bloomberg News and in the headlines recently. And agency mortgage-backed securities, to give you some context from a spread perspective, are at the widest levels versus treasuries that you've really seen since the financial crisis. And a lot of investors are asking, what are we missing here? What's going on there? And in our view, it's purely a function of Carol's question on flows. You've seen a tremendous amount of flow into the front end of the curve. You've also seen banks reducing holdings from the highs after COVID and QE, but you've also seen quantitative tightening implemented in earnest, and it's created a pretty historic opportunity in our view towards mortgages and just risk-free assets, generally speaking.
All right. Good to get your thoughts on that, and so appreciate it. Sam, thanks for finding time for us, and have a great weekend. Sam Dunlap, CIO at Angel Oak Capital Advisors, joining us on Zoom in Atlanta. Hey, we do want to get a checkup on the overall trade and some of your top business stories. Off to Charlie Pellet we go with the Bloomberg Business News.
Thank you very much, Carol and Jess. We got minutes to go, specifically 5 minutes to go ahead of the closing bell. S&P swinging between gains and losses. Going to be very interesting to see how it all shakes out. Right now, looking at a 1-point loss in the S&P 500 index. The Dow right now holding on to a 16-point gain, up less than 0.1%. NASDAQ, as we check the numbers ahead of the close here, NASDAQ Composite Index down 34 points, drop there of just about 0.3%. 10-year yield 4.24% right now. We have got the 2-year yielding 4.93%. Spot gold up 33 cents the ounce. Right now we've got gold at just about $18.89 the ounce. Little change there. West Texas Intermediate crude up 1.1%, 81.23 a barrel on WTI. Cannot ignore Bitcoin today. Bitcoin down 5.3%, just above 26,000. Bitcoin right now at 26,012. So again, recapping here, stocks lower. We're on track for a 2% weekly loss for the S&P 500 index. That will be the third weekly loss in a row. I'm Charlie Pellet, Jess and Carol. That is a Bloomberg Business Flash.
On it as always, Charlie Pellet. Thank you so much. Hey, one on it is Palo Alto Networks. Jess, what's up with this? Friday afternoon after the close earnings, it just doesn't happen.
What is happening there? And all eyes on that.
World.
One of my colleagues, who you know, Carol Ryan Vlastelica, one of our star reporters on the equities team, he did his Tech Watch column specifically about this today. And they did reach out to the company. They, quote, said these were logistic issues, but this
what the heck does that mean?
Exactly. Obviously not answering our question, Carol. So when you look at the rarity of something like this happening, and by the way, the stock coming into today had already sold off about 18% since that announcement was first made that they were going to have this after the bell on a Friday. It's very rare. Bespoke Investment Group was actually crunching the numbers over the last decade. The only times you actually saw this was in 2020, in December of 2020, Nike did this, but they ended up having better than expected results. And then we saw another company do it actually in around 2017. And so it's very rare. And that has investors jittery right now, Carol.
Yeah, stock has been on a tear this year. Their options are surging too, led by $170 puts.
Yeah.
So people are a little bit, is that nervousness, right? If you're thinking that maybe some bad news, right? So I don't know. We're gonna obviously be tracking it, looking for the numbers when they release and any headlines. So we will certainly bring them to you. As you said, the stock's been selling off since it said that, but it's up 50% so far this year.
Right.
So it's been on quite a tear. All right, folks, just a few minutes left in today's trading session. Time to head over to Scarlett and Romaine. We're going to wrap up this trading day this week. I'm tired. I don't know if you're tired, but looking forward to talking with our TV colleagues. Jess has been busy this week. All right, beyond the bell right now. It starts.
Russell is your one bright spot among the major indices. Stick with us. We're getting closer to those bells. Our full market coverage coming up right now as we take it to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with Carol Massar and Jess Menton. Welcome to our audiences across all of our Bloomberg properties here on a Friday afternoon that's kind of capping what has been a relatively crazy week, Carol Massar.
I need a drink. I don't know about you. I'm exhausted. And, you know, we're not even done.
The weird thing is Carol said that to me at 8 a.m. this morning.
It is Friday, though.
I did not. I was drinking water at 8 a.m. It is Friday, though. Thank you both. It's 6 o'clock, 5 o'clock. What is it they say somewhere, right? You know what's crazy is that even after the closing bell, we're going to get more news. An earnings report from Palo Alto Networks. I mean, stock's up, about 1% right now. It's up 50% this year. But ever since they said, right, Jess, that they were going to report after the close on a Friday, it's been trending lower.
It has been. And it's such a rare event to see a company do something like this. It's only happened twice in the last decade. Ryan Vlastelica on our team did a great Tech Watch story about this. But Nike, for instance, was one of those rare companies that did it in 2020. But it wasn't necessarily anything scary that they announced that Friday, but still, this is a really rare event, and so investors focusing on this after the bell on a Friday.
Didn't Berkshire Hathaway do that too for a while?
They still do it on Saturdays, but that's been their tradition.
Yeah, Warren Buffett gets his own, like, he's allowed to make
he gets a pass.
He
It's
gets
Warren
a pass
Buffett.
on everything, doesn't he? Because it's Warren Buffett. All right, now what?
Can I talk? No, I'm sorry. Usually I'm the one to talk over her.
I was just going to say.
I mean, when the tables are turned on me, you know I don't like that, Carol Massar. All right, we are getting the closing bells here in New York here. We talk about 5th trading day of the week, and, well, what is looking like, at least for the S&P and the NASDAQ, going to be a 4th day of losses here. The Dow Jones Industrial Average just poking into the green as we get to the closing bell. So it's going to finish the day higher by about 35 points, or about 0.1%, still below that 35,000 level. The S&P 500, we have to wait for these numbers to settle, but it's right on the dividing line right now between gains and losses. So we're just going to call it unched on the day. 4370, that's the number on the screen right now. The NASDAQ composite lower by 26 points, or 0.2% here on the day. And let's take a quick look here at the Russell 2000. The Russell 2000, actually one of the few bright spots on the day, up about 0.5% here on the day, though we should point out all the major indices lower on a weekly basis.
Want to guess what's the best performing name in the S&P 500 this week, anybody?
No. Generac?
No. NVIDIA.
No.
Up another 6%. Go figure.
That makes sense, given that chip makers are the best performers and the only performers for the week, the only one to gain. If you look at what's happened today, it's been all over the place, although energy stocks have been at the top of the pile all day long. Energy stocks moving higher by 0.9%. Food and staples are also another big gainer, up 0.5%, and transportation gaining about 0.4%. The decliners have been very consistent all day long. You had Tesla leading the auto stocks lower, 1.2% drop on the day. Media entertainment, that's Alphabet, and diversified financials losing about 1/3%.
All right, let's get to some of the individual gainers in today's trade. So number one in the S&P 500 is Ross Stores. It's up about 5%. We were breaking their earnings after the closing bell last night. The company reporting second quarter earnings per share, that beat estimates. Analysts loving what they heard. They raised several of them their guidance. They noted that Ross is well positioned in what is a favorable environment for off-price retailers. This stock, though, has been definitely a laggard among some of the retailers. It was also top of the NASDAQ 100. Same thing for AMAT, Applied Materials. We talked about them yesterday, reporting after the closing bell. That stock finishing up with about a 3.7% gain, giving a bullish forecast for the current quarter. So maybe the industry slump that we've seen, maybe that is a thing of the past. That stock has been on quite a tear, up about 40% so far this year. And this one is for Romaine, Bloomin' Brands. Do you like Bloomin' Brands?
Yeah,
you like a Bloomin' Onion?
Yeah,
Scarlett, you like
what's
a
going
Bloomin'
on with
Onion?
them?
I prefer fries over onion rings.
Oh,
or
Ignore Scarlett for a second. What's going on with Bloomin' Brands? Talk to me about the onion.
Up almost 9%. Rallying today, heavy volume, up the most, I think, about 6 months. Starboard Value reporting a 9.9% holding in the company. 13% of the float is shorted, but nonetheless showing some interest.
I know. I love this story, too, because the first thing I thought about was, you remember the old, when they took an interest in Darden, and you had that, like, huge report where they basically said, you need to salt the pasta water before you put the pasta in there at Olive Garden. Anyone?
That gets people reading, at least.
This is why we love you, Romaine. You read into those, like...
I still own that report, by the way. I was going through some old things. And
Were you really?
It's a memento now.
All right. I never put salt in the pasta water. Do you put salt? No,
Olive oil.
I thought you were. Are you Italian?
Olive oil. Yep. So it doesn't
Ooh,
stick.
I do
right?
the olive oil.
Yeah.
Oh.
Except I don't have cooking gas right now. It's a long story, but
All right.
I'm working on it.
Should we get to decliners?
Where's Jess living? Like in a shanty town or something? What's happening?
Fred's stabilized apartment in New
Oh,
York.
there you
You do
go.
what you can to keep those things, but I'll do
Stabilize.
that.
You should be happy. Just have a place. Gas.
Exactly.
Come on.
No complaints here. As far as the losers, unfortunately, of the day. So I know Romaine's probably going to do some sort of
We call them
pop quiz for
decliners,
me.
but okay.
Decliners. Keysight Technologies, not only the biggest, one of the biggest decliner in the S&P 500 today, but also for the week, because I know Romaine was going to ask me about that, but that's ticker symbol KEYS. So down about 13%. So what happened there? Barclays did cut its rating on the stock. Basically is a lack of growth catalyst there. So really seeing that stock pressured. Another one I'm taking a look at, again, with WeWork, ticker symbol WE, that's slumping on this plan it has for a 1-to-40 reverse stock
I
split.
love this. You know why I love this, Jess? Because when I saw this, I immediately thought of Carol Master, who loves her penny stocks. And now she can't report on this anymore because it's not going to be a penny stock when they're done. I think it's still going to be worth the same amount of money, but, there you go.
Another one I had to point out too, though, is Deere, and obviously this is a company. What that means for the global economy, because it is the world's top agricultural equipment maker. That stock down 5%, so that was its worst day since the beginning of this month. So even though it lifted its financial outlook for the year, investors are wondering whether the industry conditions may be as good as it gets. So you are seeing that stock pressure today.
Yeah, absolutely. Let's take a quick look at what happened in the yield space here. On a daily basis here, we actually saw yields down across the board here. Remember, it was 6 straight days of sell-off in the Treasury space. You're getting a little bit of a reprieve here on this day. The only real significant move that we saw was on the shorter end of the curve, and that was really only up by a fraction of a point here. The 10-year yield, though, you take a look at the downdraft there, but you have to put it in context of what we've seen over the last 5 weeks or so. 40 basis points over that 5-week stretch, and on the 30-year, 50 basis points over a 4-week stretch. So remember, we used to talk about this a lot. It's not just about the level of yields, but how fast they change. And that can cause, guys, a little bit of agita. Believe it or not, Carol, did you know that earnings season is still here?
I know it, absolutely. We're going to actually do earnings at the end of our broadcast. We're not done yet.
Well, I'm going to do earnings right now, Carol Master, because Palo Alto Networks is crossing the wire right now. A rare report here on a Friday afternoon. And let's go straight here to the fiscal fourth quarter numbers here. Their billings in the quarter rising about 18%. That's relatively in line with expectations. $3.2 billion. The street was looking for 3.17. The company now saying that overall, the EPS coming in at $1.44. Let's get straight to the forecast. For the full fiscal 2024, remember, this is their new fiscal year now, revenue is going to be $8.15 billion to $8.2. The top end of that range is below the average of analyst estimates at about $8.3 billion here. And for billings in the full fiscal year, $10.9 billion, guys, to $11 billion. Once again, a little light here, but nothing really out of whack here, at least not that I'm seeing on the headline numbers.
And I guess that's why you're seeing the stock move higher in after-hours trade. It's up by 4%. It was all over the place in trading today. At one point it was lower, but it did finish higher by 1%. I guess people were expecting the worst, because what company wants to voluntarily announce their earnings on a Friday afternoon after the market closes in the middle of August?
Yeah, I don't get it. What's interesting too is, right, we were concerned about a little bit about that first quarter forecast, right, the revenue missing, but I'm looking at their 2024 billings, and they're talking about what, 10.9 billion to 11 billion. The estimate is 10.77 billion.
That's not bad.
No, exactly. So up another 4%. I mean, this is a stock that's been on a tear, excuse me, in 2023. And so it looks like it's just continuing to build upon that.
And we'll have to stay tuned to see what exactly they're going to also say on this call, because when Ryan Vlastelica on our equities team talked to Stifel analyst Adam Borg, he said the timing suggests that Palo Alto wanted investors to have the weekend to digest. So it's going to be interesting to see what else they're going to say on this earnings call.
Yeah, I'm going through this release now, and there's really nothing that jumps out at me. I mean, this is pretty much a standard fare here. Most of the numbers either in line or at least within the general orbit of what the street was looking for here. The guidance also. Now, we should point out there aren't a lot of details in this report either here. They don't do a lot of commentary other than sort of the canned quote that we get from the chief executive here. But that earnings call scheduled to start at the bottom of the hour here, 4:30 p.m. New York time. So we'll see if there's anything, any additional information that comes up on that call.
Do you think maybe we're kind of predisposed to looking for something terrible and conspiracies?
Yes.
I mean, maybe someone scheduled it for this day, and then they went through with the original schedule.
Well, in a world, an environment where things can surprise us, we talked about that earlier in the 3 o'clock simulcast, where a company, a certain, a huge miss or something. Yeah, that's exactly. I'm like searching through the press release, and I'm like, what am I missing? What are we missing? So we're a little suspicious here. How did everybody do on the Bloomberg quiz?
Do you take the Bloomberg quiz every day?
Every Thursday.
I didn't take it this time. Well, you must have done well, because this is like the first time you brought it up in weeks.
It's exact. I'm looking for Romaine's name. I'm like, because he's always like top 10.
What are you? You're on there? I have to look this up.
I'm number 6.
So I do quiz go on the Bloomberg terminal.
I have never broken the top 10.
You've never broken the top 10?
Kelly Lyons is always in the top 10.
Okay, well, mazel tov to you. That's good. Now, did you do this honestly, or did you cheat?
You can't cheat this. How can you cheat this?
I don't know.
All right.
I don't know, Carol.
I'd like
There's your
everybody
name,
to-
Carol Masser. You're number 6, number 5 is anonymous.
I know.
That's also Carol.
Right. That's how you cheat.
Sorry, I never do well, so it's like I'm just having a good moment.
I always look, it's for anyone who has never done this, for any Bloomberg subscribers. Not only can you see the rankings by, what we do here, but of course the rankings from all the folks at different banks here.
Yeah.
And I think the number 2 people on the quiz, I'm not going to say their names, but they're at Trillium Management. So congratulations to those 2 folks at Trillium who both came in at 1 and 1.
I wish they would do a year-to-date ranking too.
Oh, that's smart. Yeah.
That'd be good to know.
You speak like a good Bloomberg. Year to date.
Let's slice and dice it. Let's get more data on that.
All right,
That
guys.
first question, though, really threw me off, though.
I don't remember the first question.
Well, I'm looking at it now.
Which one is
it's
it?
It's about where Sam Bankman-Fried is.
You didn't know that? You didn't do that story? It's like probably among the most read on the Bloomberg.
Oh, gosh, Carol Masser. Goodbye.
Come on,
But he
Romaine,
was
get
busy
with it.
reading about 5% more.
All right, guys, we got to
Have
go.
fun on Monday, Carol.
Bye. Bye. That does it for Beyond the Bell. We'll see you again on Monday, guys.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, guys, we are going to wrap up. We're not quite done. We still have a couple of hours here on Bloomberg Business Week, but I do feel like we started the week and we several times came back to what was one of the big stories. Yes, the move that we saw along the U.S. Treasury curve and really among global sovereign debt, if you will, in terms of yields moving up. But China, every day there was a stack of new headlines.
There definitely was, and especially because this is the world's second largest economy behind the U.S., and then obviously the third one is Japan. But this is really crucial to see how that economy, you're seeing particularly, especially this year is supposed to be this big rebound year for the economy. What does that mean when you have different trajectories for both of their central banks?
It's been tough going, and we saw that in certainly the economic data points, the deflation fears, a weakening housing market, a crisis in the shadow lending sector, so much a surprise rate cut. So let's get to it. Shahzad Qazi is back with us. We're so delighted. He's got a report out, a new note, and he asks, is China starting to collapse? Shahzad, of course, is managing director at China Beige Book International. They were founded over a decade ago, and really to work with and help institutional investors and corporate CEOs navigate China's notoriously black box economy. That's how they write it on their website. It's so well said. He joins us on this Friday afternoon. Shahzad, the report, you ask, is China starting to collapse? Is it, or is that just ridiculous?
No, China is not collapsing at all. The market is just so disappointed at the way 2023 has unfolded. They were expecting a big bombastic recovery. We always argued that was very unrealistic. That has not happened. And so the investment community has settled on the narrative that China is on the verge of collapse, and the only thing that can save the day now is big bang stimulus. We, of course, argue back and push back against that whole thesis.
What's been the catalyst to prevent us seeing a bigger rebound here in China's economy, since so many people were expecting that to happen in 2023?
I think some of the assumptions going into 2023 were just misplaced. We had 2 years of a very bad economic shock because of zero COVID policies, and of course the deflating of the property bubble, which really, not only destroyed household wealth, but really crushed consumer confidence. So expecting the Chinese households to come strongly into 2023 and spending left and right was very, very unrealistic. Couple that with the fact that there is a slowdown in the external environment for China, as reflected in its export orders, as seen through sort of the manufacturing recession, if you will, that we're seeing take place in Europe. We're certainly seeing pretty slowdown in manufacturing out here in the United States. Those are starting to add on. And of course, the critical thing, the property market, which is in a multi-year restructuring phase and will be a problem story, I think, for the Chinese economy for several more years to go.
Just forgive me. I mean, Shahzad, go back to what you said. What did you say about the big banks in China? What was needed?
The idea right now, the consensus is that, China needs to unleash big fiscal stimulus projects, the kind that they did in the aftermath of the global financial crisis, and only can big bang fiscal stimulus save the Chinese economy. But that's not going to happen. Chinese policymakers are looking to de-risk the system. They want to bring down this whole, this over-leveraged problem that they have in the economy. They're not going to, I think, add further fuel to fire.
So then what? Okay. So it's great that it's kind of contained domestically, all right, or at least how you're seeing it. But I mean, if what's needed is not going to be done, then I think we talked with you earlier in the week, like, what do we need to, in terms of a reset, think about the China growth engine?
Yeah, I think, as we discussed the other day, first of all, investors need to understand that they're looking at a structural slowdown in China. They're looking at the economic management of the country depart from the model that they're used to, where we used to get high rates of growth. Now China is actually paying the price for some of it. The political leadership in China has decided that they have the appetite to pay the political price because they see it as short-term pain and a much, their time horizon is a lot longer than the markets and investors, I think. And they're willing to pay the price today in order to set the economy on a more healthy, sustainable pace of growth, even though it's going to be a much slower pace of growth than anybody, I think, anticipated China hitting. They're going to potentially do 5% this year. We're looking at sub 5% for sure moving forward, maybe even 1% or no growth down the line if things continue to deteriorate and they're unsuccessful at transitioning the economy.
All right, not apples to apples, but is this kind of akin, if I think about Paul Volcker, when he had to rein in inflation in the 70s, like he had to do something that was going to make it very uncomfortable, but was going to put the U.S. economy on the right trajectory. Is that kind of where China is? And it's kind of the responsible way of, managing your economy?
Within the property market and the way they deflated the bubble, I agree with that completely. Pain, it has to be endured because that's what happens when you deflate bubbles. But that's exactly what they're trying to do. And this year, I think, is a great example of the fact that they haven't jumped in to do massive bailouts. The last 2 years, they haven't done massive bailouts. So I think that's indicative of the fact that they are willing to put the economy on the right track and to avoid what could potentially have been a much worse hard landing. We may, I think, have gotten the Chinese hard landing that everybody predicted this whole time over the last couple of years with the Evergrande crisis and the property crisis that we've seen.
Have you seen any sort of red flags brewing when it comes to their property market?
I think this year has been, a very disappointing story for those who bet on the fact that property was on a steady road to recovery. You're getting sales weakness, you're getting price weakness. Anytime you see an improvement in the numbers, it's not at all sustainable. And it may very well just be the fact that year-over-year results are so distorted this year, given the on-again, off-again switch that the economy was put on last year. The property market, and specifically the residential market, the housing market, has, I think, a lot more disappointment ahead, sort of like a one step forward, two steps back type of scenario. We'll see what happens, by the way, on the commercial real estate side of the economy, which oftentimes will escape attention. The commercial property developers are also suffering, as we've seen in China Beige Book's numbers over the last couple of months.
All right, so I'm thinking about our audience who, just like the rest of us, over the last couple of weeks are feeling a little, overwhelmed by all of the headlines coming out of China. As you say, China is not starting to collapse. And what's going on is really kind of the responsible thing in terms of getting the Chinese economy back on track. So what should we keep on our radar? And just got about 40 seconds.
So don't fall for the China's Lehman moment story. It's not happening, as we said. If there is a larger crisis that begins to brew, I would expect more policy support and banks to step in, potentially taking over certain companies and certain projects. But at the same time, don't go to the other end of the spectrum and start thinking there's going to be big bailouts taking place, big fiscal projects being announced. A lot more nuance and sophisticated tracking is needed this time around.
But there might be more stuff that falls down, more bankruptcies, but that's going to be okay, just really quickly.
we will continue to get a mini crisis along the way, absolutely. I don't foresee this turning into a big Lehman moment. You can get Lehman moments in a non-commercial financial system, which is what you have in China.
So great to check in with you 2 times this week. Shahzad Ghazi over at China Beige Book International. He's the managing director. Have a great weekend. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got Palo Alto Network shares surging 9.5% after hours, a rare Friday after the bell announcement from any company. Palo Alto Networks has forecast billings for 2024. That guidance did beat the average analyst estimate. After hours now, we've got Palo Alto up by 9%, a stock we're following for you here at Bloomberg. Turned out to be a down day, barely, for the S&P 500 index. index, definitely a losing week. On the week, the S&P was down 2.1%, and that is the third weekly decline for the S&P. On the week, the Dow was down 2.2%. NASDAQ on the week down by 2.6%. Today's numbers at the close, the Dow ends the week, heads into the weekend at 34,500, a gain today of 25 points, up by 0.1%. S&P virtually unchanged on the day, down half a point, little change there. NASDAQ down 26, a decline of 0.2%. 10-year yield 4.25% with a 2-year yielding 4.93%. Spot gold at $18.89 the ounce, and West Texas Intermediate crude up 1.1%. 81.30 for a barrel of WTI. Again, Palo Alto Networks forecast billings for 2024. That guidance beat the average analyst estimate. Palo Alto Networks, after hours on a Friday, up now by 9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I know, amazing, right? Some earnings after the close. All right, Charlie, thank you so much. Watching that. We are living in unusual times. I feel like we can't say that enough. Having said that, the macro impacting everything, and that includes crypto. Just we had a period of unusual calm in the crypto markets, and that kind of came to an end abruptly this week. The notion of higher for longer interest rates sparking a sell-off in risk assets, and that included Bitcoin. It led to mass liquidations of bullish bets, and then there was the Wall Street Journal report about SpaceX writing down the value of its Bitcoin holdings. So it was just a lot.
There's
right?
a lot. And then you're also seeing risk assets, like you're talking about when it comes to Bitcoin sliding as much as 8%. So clearly under pressure. And then everybody's still watching that $30,000 threshold when it comes to Bitcoin.
But we're below it, right?
Yeah, correct.
All right, so let's get to it. Our weekly crypto segment. Back, or with us, I should say, is Frank Holmes. He's executive chairman at the small cap publicly held Hive Digital Technologies. It's a crypto mining company, roughly 321 million in market cap. It's up 163% year to date. He is on Zoom from San Antonio, Texas, from Jess's home state.
Yes.
Frank, nice to have you here. Happy Friday. How are you?
Outstanding in a bear market.
Well, tell us about that. What do you make kind of the recent trade? It is a bear market, although we're about 60% above where it started the year on Bitcoin. So we have had a pop this year.
Yeah, that's true. That's absolutely true. But after a brutal sell-off last year.
Yeah.
But what's interesting to me is that the dollar is up almost. We do this rolling 20-day standard deviation movement of the dollar versus 10-year government versus gold and versus Bitcoin. And what we're seeing right now going into the Jackson Hole meeting next week is the dollar's up almost 2 standard deviations. That's a huge move on the upside. And this week we saw gold break below the 200-day moving average. And naturally, yesterday was Bitcoin took it on the chin. And I think these collateral assets are moving in opposite direction to the dollar. So I think that's what we're living with. But
That's interesting because Carol and I were talking about how that had a correlation with the dollar as well when you're talking about what that means for stock prices too, but for Bitcoin in particular, because earlier this year, especially when it came in March, that turned into one of those particular assets that were actually rallying in addition to technology stocks. But I'm curious as far as the dynamic right now between what's happening with Bitcoin and obviously what we're seeing with the bond market at this point.
Well, we had the 2-year, the 5-year, the 10-year, and the 20-year government bond yields all screaming this week. And that makes it very difficult for alternative asset classes. And I think that sort of risk off is clearly the trade right now, and that's part of that contagion. But Bitcoin did take off after Silicon Valley bankruptcy. We did see that. What's interesting to me is that it's not as oversold as it was a year ago in May of 2022. Is actually, when you look at the elasticity, the movement, the bands of how much it goes up over 20 days versus down 20 days, it was actually more oversold last year or when FTX blew up.
Hey, listen, if you can, Frank, tell us a little bit about your business, because you guys are certainly, involved in, I feel like, so much that we talk about, whether it's the connection of AI, the Web3 digital transformation. I'm looking a little bit at your website in terms of the things that you guys are involved in. You're operating massive data centers. Are you building new ones? Give me an idea of the business environment and where you guys are spending the most money and the most time and the most effort.
The biggest growth is AI, clearly, and we have the most experience. Hive was the first to use GPU chips and has first actually crypto mining company to ever go public in 2017, and it ushered in many other companies coming into the space. Well, we've been taking our data centers and slowly been building out. And last year we purchased almost $70 million of these high performance NVIDIA chips. And now we're building out the expansion of that. And we see that as much more stable, high profit margin business than actually Bitcoin mining. Bitcoin mining has these incredible moves to it where your profit margin expands dramatically and then all of a sudden it contracts. So our focus clearly for Bitcoin mining, we will double our footprint over the next 6 months, but the real growth opportunity is clearly the reconfiguring of our data centers into AI.
Dig a little bit deeper into those numbers for us. So give us an idea of Bitcoin mining, which has been your big business. How much is that still your big business? But give us an idea of the AI side of the business and the kind of growth you're seeing. And does that essentially become the business in 3 years, 5 years, 10 years? Like, help us out here.
You looked at it today, it would be 10 million, say 8 million a month, and you're making about 2 million a month. With AI, that number would be making 6 million a month on $8 million. So it's a 90%, 80 to 90% gross margin business. And you're actually less expensive than the AWS or the Google, et cetera. And so the whole ChatGPT has exploded the demand for our A40s, our 4,000, 5,000, 6,000 chips.
Who are your clients that are using this mining?
That's a great question. We're B2B, so we do not deal with the public. And there are other service providers, even with Bitcoin mining, we do not deal with the public. We will hodl some of our position, that is, put it in the bank. Others will sell to turn around and expand the operation. But when it comes to the AI, there are service providers that do all the KYC, AML, do all the client hand-holding, and they take a fee off the top for doing that. We provide all the infrastructure and the latest of chips, and they rent basically on an hourly basis.
So when you say KYC, is that know your customer? What does that mean? Break it down for folks. That's okay.
Anti-money laundering. When you deal directly with a business, you have to have people on staff that are expertise in anti-money laundering, know your client rules, KYC and AML. That is when you have a B2C business model. Mm-hmm. When you have a B2B, that's not what we have to worry about. That's one reason why I'm a fund manager, and launching of Hive was we couldn't launch a Bitcoin ETF 6 years ago. So we ended up co-founding the creation of Hive because we basically mine the coins. We create that original coin.
But it sounds like you're increasingly moving away from that business because the AI side of it is much more productive. Is that fair?
It's fair because it's two parts. You know, it's a good question because we're mining Ethereum, and Ethereum was a very high margin business, just like AI is. And so with that, I think the volatility of Bitcoin will maintain itself. It'll be an ongoing business. But the real growth and big potential are these data centers that we built and own, and we continue to expand on, and the applications that are necessary with these chips that are out there. So I think AI, there's no doubt, is high margin, high growth, and data centers have huge valuations versus crypto mining stocks really don't have the big valuation that AI has.
Are you able to use, whenever you're talking about some of the data and tracking your customers as far as inflection points and how that can affect maybe the crypto space and the prices?
No, we don't. We really don't get into that. Where we use AI would be on if you're mining any of the alternative coins in a proof of work scenario, you use AI to maximize your returns, what you want to mine. But no, we don't. That's all. It's a B2B business model.
Yeah, it's really interesting. So CapEx that you guys, data centers are expensive if you're building them out, but we know AI is going to need them. What are your expectations for CapEx over the next 6 to 12 months? And are you raising it? Do you feel confident enough to raise it in today's environment?
We do. We feel very confident. We have a strong balance sheet. We have positive cash flow, even with Bitcoin where it is today. And we think that the industry itself is going to go through a big reckoning, the Bitcoin industry, because a lot of the machines that are mining today are not as energy efficient. And there's going to be what's called a halving next May. And that's basically going to say you're going to earn half the amount of rewards of Bitcoin. So Bitcoin's going to have to be over $60,000 to cover your costs. So I don't think it's going to work out perfectly for a lot of those inefficient miners. And so we want to make sure that Hive is in a position that we can deal with that. And that's what we've been doing. So our expansion there in ASICs and along with AI will probably be in the tune of $100 million.
All right, well, good to check in with you. And Frank, you got a T-Rex behind you, so you better be careful. I think it's a T-Rex. It's a red one.
It's a red one.
It's what?
It's a political statement that came out of China by a sculptor that China's trying to eat the world.
It's a fascinating sculpture. Listen, good to check in with you. Look forward to doing again in the future. Frank Holmes, Executive Chairman at Hive Digital Technologies on Zoom from San Antonio, Texas. Let's get a check on the latest world of national news. Off to Nancy Lyons in our 99.1 newsroom in the nation's capital. Nance, all yours.
Thanks, Carol. President Biden says the U.S., South Korea, and Japan are entering a new relationship that is ironclad. Following a trilateral meeting today at Camp David, Biden applauded the leaders for making history by participating in the first standalone gathering of leaders from all three nations.
Your leadership, with the full support of the United States, has brought us here because each of you understands that our world stands at an inflection point, a point where we're called to lead in new ways, to work together, to stand together. And today, I'm proud to say our nations are answering that call.
Biden says the nations have agreed to consult on mutual threats. Donald Trump, facing now 4 indictments, was planning a news conference Monday to present a report that he said would totally exonerate him. But that plan has changed. It's now canceled, apparently on the advice of his attorneys. Bloomberg's Zach Cohen says that does not mean the former president will give up efforts to capitalize on his indictments.
Trump and his team have been pretty clear that they want to use these indictments, both in Georgia and Washington, where prosecutors have charged him with trying to overturn the 2020 election, as an opportunity for him to re-air his grievances and his unsubstantiated claims of sufficient voter fraud to make up the difference in an election he did lose by 7 million votes.
Again, Bloomberg's Zach Cohen reporting from Washington. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Cybersecurity firm Palo Alto Networks shares surging after hours on a Friday with an announcement after the closing bell. The stock right now up by 8.1%. Palo Alto Networks is projecting billings for the current quarter that beat Wall Street's estimates, easing fears that a slowdown in demand may weigh on earnings. Again, after hours, Palo Alto Networks up now by about 8.4%. Losing week for the S&P 500 index, down 3 in a row on the week. The S&P was down 2.1%. The Dow down 2.2% this week. NASDAQ this week down 2.6%. Today, a little changed on the S&P, down by about half a point. We have the Dow Jones Industrial Average up 25 points, up by about 0.9%. And we had NASDAQ lower by 26, a drop there of 0.2%. Again, just in terms of the Dow, just want to correct that. It was up by 0.1%. 10-year yield 4.24%, with a 2-year yielding 4.93%. Spot gold at $18.89 the ounce. West Texas Intermediate crude up 1.2%, 81.39 for a barrel of WTI. So what did happen with stocks this week? That question for Sam Dunlap, Chief Investment Officer at Angel Oak Capital Advisors, who was a guest right here on Bloomberg Business Week.
It's definitely, in our view, a function of yields. You know, where we focus is fixed income and not necessarily the equity markets. But I think equities have clearly been under pressure this month and this week, just given the recent rise that we've seen in risk-free yields over the month. I mean, just for August alone, you know, Treasury yields are up 4 to 35 basis points across the curve, and that's really been pressuring clearly stocks and other risk assets here.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, recapping, little change for the S&P 500 index, down today by half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar, along with Jess Matten. She is in for Tim Stenovic on this Friday. Is it Friday, Jess? I think it's Friday.
It is. It's been a long week. I hope it is.
Either way, folks, everybody in that control room, we're leaving after this show. I'm just telling you. We're counting it a Friday. It is Friday, of course. It's just been a busy, dense week. We have, though, a really interesting next segment coming up because, you know, Jess, earlier this year, McKinsey came out, of course, the consulting giant, and they wrote about quantum technology, and they noted, and this is a quote, quantum computers represent a completely new approach to computing, and while they won't replace today's computers by using the principles of quantum physics, they will be able to solve very complex statistical problems that today's computers cannot.
And quantum computing has so much potential and momentum that McKinsey has identified it as one of the next big trends in tech. Quantum computing alone, just one of the 3 main areas of emerging quantum technology, could account, Carol, for nearly $1.3 trillion in value by 2035.
So do you think we've got everybody's attention now?
I think we do.
All right, so let's get into it. We welcome Raj Hazra, President and CEO at Quantinum. I hope I'm saying it correctly. There's a lot of U's in there. He's with us on Zoom from Portland, Oregon. Raj, nice to have you here with us. Say the name of your company. I want to make sure we've got it correctly.
It's great to be here. And it is, you got it almost 90%, right? It's Quantinum. And yes, there are a couple of E's in there.
Okay. We wanted to make sure we had it right. Listen, I'm so glad that we have you here. First of all, tell us a little bit about what your scientists and your team and your company are working on. What's the mission? What's the core business?
You put Quantinum is the world's largest full stack hardware plus software quantum focused company. We have only one singular focus, and that is to accelerate quantum computing technologies and its commercialization to solve, as you were noting just now, some of those society's largest challenges around insight generation, around cybersecurity. It is the next big thing because it is what's going to cause the next big value to society and value in economics. So our job is to future in.
So help me out here, because we're all saying the next big thing in technology is AI, artificial intelligence. Is there a connective tissue between AI and quantum technology, or should we be thinking about them as two different things or highly connected?
Absolutely not. You hit it on the head. AI is a huge force. Think of it as an algorithm set. Think of it as a methodology. Think of it as working on data. The key to it is what infrastructure does it run on? So if you note, AI is all about data. More data every day, GPT 3, 4, 5, the training models are getting huge, lots of data. And it's going to run into, and it's running into two specific challenges. How do you compute with this vast amount of data in a sustainable and efficient manner? And number two, which I think you've seen quite a bit in recent talk about AI being trustable by being interpretable and transparent. That is, the decisions it makes, how do you know it's right? How do you know it's the right thing? So quantum computing is very relevant to both. There are places in classical AI techniques today that quantum is a better way to compute from either data storage perspective or data compaction perspective, or just the raw processing of it. And the more exciting part of it is quantum allows things like languages to be represented in these models in such a way that you can actually make them transparent and interpretable, that you can say why, exactly why it made the decisions and told you what answers it did. And that is huge because it now lets those kinds of AI techniques be brought into the realm of regulated industries. Imagine it's not just ChatGPT, helping you write an email to your friend. It is ChatGPT or large language models making large decisions in industrial workflows, in banking, in finance, in linguistics of trying to decide what RNAs and DNA modeling can do. So the application is huge for AI to benefit from quantum computing as the next generation computing infrastructure that not only makes it more powerful and efficient, but also makes it interpretable and transparent, thereby making bigger use of it for society.
You worked at Intel for about 25 years, and when you were there, you obviously also were incorporating AI and machine learning there that really helped revitalize Intel's growth after obviously a prolonged period of decline there. What did you learn from when it came to AI, and how are you going to end up utilizing that in your role at this point?
That's a great question. As you noted, I was at Intel for 25 years, and what we saw, the growth of classical computing, CPU or central processing unit-based computing, expand to heterogeneous compute, where you had accelerators for various workloads. AI was an emerging workload, and what I learned was you have to do a few things in order to successfully deliver to customer expectations. You have to build the right infrastructure for the right workload. Number two is you have to work with the software industry or the software portion and not just build hardware and build them in lockstep. So there's a complete solution available. There isn't just a hardware asking for software to be written for it. And the third thing is what we learned is patience in adoption, and patience and integrity in stating what the results are fundamentally important, so you don't create a hype cycle that collapses on you. That is exactly what I bring to Quantinuum. We are working on innovative hardware, but we are a full stack company, and we are developing hardware and software in concert so we can actually build solutions for our customers. I'll give you an example. Just last week, we announced that names like Airbus and BMW are working to incorporate quantum technology into their standard workflows that exist today to look at next generation fuels, or what's called new energy. They're using quantum computing technology from us, working with us, both our hardware and our software, to look at better ways and more efficient batteries and fuels of the future. That's something they cannot do with classical computing for very long, if at all. So the lessons learned are customer relationships, early and close relationships between hardware and software, and working together to build out true economic use cases.
All right. Well, listen, we're going to have to continue this conversation another time. We have run out of time, but we really appreciate it. Quantinuum CEO and President Raj Hazra joining us from Portland, Oregon. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pelletier. Cruise robo-taxi collided with a fire truck yesterday in San Francisco, injuring the vehicle's passenger. The incident is raising questions about why the vehicle did not know to stop for an emergency vehicle and why it didn't notice through traffic while crossing an intersection. The autonomous driving company is a subsidiary of General Motors. Ford has debuted a $300,000 800-horsepower Mustang. The 2025 Ford Mustang GTD is a street-legal, limited edition coupe with a supercharged 5.2-liter V8 engine. Deere has lifted its financial outlook for the year as machinery demand from farmers remained robust despite slumping crop prices, but the stock was down today by 5.3%. More from Steve Rappaport.
Charlie, the world's top agricultural equipment producer, expects net income for fiscal 2023 between $9.75 billion and $10 billion. That's above its outlook in May for $9.25 billion to $9.5 billion, and it compares to the Bloomberg consensus for about $9.4 billion. Farmers have been paying up for Deere's tractors in the wake of Russia's invasion of Ukraine, which sent global crop prices surging. While expanding harvests in the U.S., Brazil, and Russia are cooling crop markets, large-scale farmers are continuing to upgrade to newer and more technologically advanced equipment. Still, slumping grain prices and rising interest rates are clouding the outlook for farm equipment makers. Charlie?
And that's Steve Rappaport reporting again. Deere shares did run lower today by just about 5.3%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, it is the Friday edition of Bloomberg Business Week. Carol Messer along with Jess Metton in for Tim Stenovec. Right now, though, back to World and National News and Nancy Lyons in our 99.1 newsroom in Washington, D.C. See, I said it was a wacky Friday, Nance.
Yeah, I know. Help. What a way to end the week. Well, President Biden says history was made today with a Camp David summit between the U.S., South Korea, and Japan. It's the first standalone summit with the three nations, and Biden says it will not be the last.
America's commitment to both countries is ironclad, and my personal commitment to bringing these three nations together was real from the very beginning.
Biden says the nations have agreed to set up a hotline to consult with one another about ongoing threats in the Indo-Pacific region, and he says they will regularly conduct joint military exercises. Former President Trump has apparently decided to pass on next week's Republican presidential debate. The New York Times cites sources who say that instead, Trump will be interviewed by former Fox News host Tucker Carlson. Trump has also canceled a planned news conference for Monday, citing advice from his attorneys for that change. Trump had claimed he had a detailed report which would fully exonerate him. Hurricane Hilary is moving through the Pacific with maximum winds of 145 miles an hour. The National Hurricane Center has issued its first ever tropical storm watch for the southwestern U.S. and Southern California. A watch means tropical conditions are possible in the area within the next 48 hours. Shane Reithardt is with Riverside, California's emergency management team.
Personal preparedness is key. What we want is people to be able to sustain themselves so that if they are without power, if they're not able to get to the grocery store, if the roads are impassable, they've got things like they keep their gas tank at least half full. And that goes for electric vehicles as well, as making sure that they're fully charged.
And Reichardt tells ABC News they'll have generators pre-positioned around the county. The storm is expected to move out of the region by Wednesday. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Jess.
All right, Nance, thank you so much. Carol Master along with Jess Metton in for Tim Stenovec on this Friday. So I feel like I'm watching the Barbie movie because there's a story that's among the most read on the Bloomberg, Jess, and it's the world's best female footballers apparently can achieve pay equality if only they, quote, convince us men first, according to FIFA's president. I mean, come on.
Right. And the world's best female footballers basically can't achieve pay equality. But if you're looking at this headline on the terminal, FIFA chief fumbles and urging female stars to seek pay equity. And so looking at this here, $570 million generated by World Cup held in Australia and New Zealand here. And looking at how a number of female athletes were quick to denounce the remarks here.
Denounce? It was a backlash.